Now, the final statement that we want to look at is called the statement of cash flows. And we're not going to go into as much depth with this, but at least I do want you to understand this statement and why it's important. And what a statement of cash flow does is it gives you a more accurate picture of the cash position of your business. And the statement of cash flow takes three different areas into consideration. It takes operations into consideration, so that shows the flow of cash from operations, and it also takes investing into consideration, the flow of cash from investing, and finally financing. So you might be asking yourself, why do I need this? I have a balance sheet. I have a income statement. Doesn't that tell me everything I need to know about the business? Well, the answer is yes and no. The balance sheet and income statement do contain the information you need, but it doesn't necessarily contain it in the format that allows you to quickly see what the cash flow position of a company is. And remember that cash is very important in a company. A company can be profitable on paper, but run out of cash. So let's give you some examples of the kind of things that you have. So in operations, you may have some sales, for example, on your income statement that are not cash sales. Let's say you sell to someone on credit. Well, when you sell to someone on credit, you have something called an accounts receivable. An accounts receivable. Now, an account receivable is money that's owed to you. So you have the sale, you made the sale, but you didn't yet receive the cash. And so a statement of cash flow takes accounts receivables into consideration, and it says, hey, we don't have that cash. We haven't had an inflow of cash from that. And it also takes into consideration accounts payable. This is a situation where you've already received a good or a service. Let's say you already received inventory, but you haven't paid for it yet. You have 30 days to make that payment. And so it takes into consideration the fact that you haven't had an outflow of cash yet to pay for that, but you already received the good or service. And so again, the statement of cash flow is clarifying. It's giving us a clearer picture of what's actually happening with our cash. Now, let's say, what about investing? Let's say that you go out and you purchase a major piece of equipment that costs you $100,000, and you purchase this piece of equipment. And let's say that you, for some reason, paid cash for that piece of equipment. Well, that purchase of equipment doesn't show up on the income statement. It would show up on the balance sheet, but it doesn't show up on the income statement. Nevertheless, cash flowed out to purchase that piece of equipment. We call that kind of a purchase a capital expenditure, or CapEx for short, capital expenditure to purchase that piece of equipment. It will eventually show up on the income statement as you depreciate it. You'll have something called a depreciation expense. You may have heard of depreciation, and that's what that does, is it gives you a chance to actually expense it over a period of time, that major purchase. But the cash outflow happened immediately, and so the statement of cash flows would let us know that. Now, what about financing? Well, let's say you had a major cash inflow because you went and borrowed money from the bank. Well, that note is not like an account payable, which is a short-term debt. It's a longer-term debt, so we call it a note instead of an account, and it's a note payable. Let's say you had a note payable, and because you borrowed $200,000 from the bank. Well, that note payable shows that you had a cash influx, a cash inflow into the business of $200,000, but It's not going to show up as income. It would show up on the balance sheet, but again, we get clarification from the cash flow statement of what our actual cash position is. And so you're going to see on a cash flow statement a figure called net change in cash and net cash position, which is going to let you know what your actual cash position in a business is in monetary terms. And so that concludes our introduction to the financials. Again, our financials are the income statement, the balance sheet, and the statement of cash flow. Thank you so much for